Welcome to Caliente Topics. This is your daily tax webcast. My name is Veronica Rosso from MNMTaxman.com, and I have Patrick Rosso, EA, as well from MNMTaxman.com. And on today's webcast, we're going to talk about tax planning and estimated tax payments. Right, Patrick?
Very good, Veronica. Happy Hump Wednesday to you.
Wednesday.
So to everybody, we're going to take a look at fourth quarter, end of the year tax planning, especially for those individuals who are self-employed and have to make those quarterly estimated tax payments. Now, to review a couple things, Veronica. First and foremost, 99% of us, unless we make an actual election to the IRS, are calendar year-based taxpayers, right? From January 1st to December 31st with the corresponding fourth quarters in play. Meaning right now in November, we're currently in the fourth quarter of the year.
Correct.
With a due date of December 31st in order to be applicable to this tax return year. We know that, right?
Correct.
Okay. And so the other thing that we have to be mindful of is that we are pay-as-you-go tax system. If you're a paid salary or W-2 employee, you're fulfilling your obligation every paycheck when you have those withholdings that are done by your employer and then are paid to the government throughout the year. Self-employed individuals have the same requirement, except it's up to them to break up either their current year tax and make sure that they pay at least 90% of what they estimate this current year's tax is going to be, or as a safe harbor, have paid in at least 100% of last year's taxes as calculated on last year's tax return. Your safe harbor being as long as you paid in as much as last year, you're not going to be assessed a penalty. And that penalty we're talking about is the underpayment of estimated tax penalty. Veronica, quick question. What's the form number that we use to calculate any underpayment of the estimated tax payments?
Form 2210.
Very good. Now, what it is that it is a by-day calculated late penalty.
Correct.
Meaning you have this form that takes whatever your underpayment of your tax was, takes into account how many days it was late, and then applies the underpayment estimated tax penalty rate, which currently, it changes, but currently it's at
3%.
very good. Excellent. So what self-employed individuals now have to make sure of is that at least by the time January 15th of the following year, that they have at least 100% of last year's taxes paid in, or once again, now with real-time accounting and real-time bookkeeping, QuickBooks or something thereof can easily, at the push of the button, if you've been doing your books right, can give you a general sense of what your profit is today. You don't have to wait to the end of the year like it was when your daddy was running the business.
Correct.
And, back in the day. And so as long as you have at least 90% of the current year taxes, whichever is smaller, you now avoid the Form 2210 reporting and then the calculation of any underpayment of the estimated tax penalty.
Correct.
Now, question, is there something that you can do right now to help yourself out? We just mentioned that you only have to pay the smaller of the two options. So would going shopping for your business for legitimate and necessary assets, vehicles, commercial offices,
supplies,
machines, equipments, time to go shopping for things that you may have been holding off, but now because of the profit that you're seeing, remember, this would only be really an important discussion to have if you know you're having a great positive year, that you're going to have a taxable profit, a
Correct.
surplus. Are you able to legitimately guide or design your tax exposure by using the either depreciation or the Section 179 expense of brand new business assets? Can I bring that to bear in full, even though we're still in the fourth quarter of the year? And the answer to that is yes. In most cases, most of those purchases will get into vehicles, which has a few limitations. But by and large, everything else that's big and large that's necessary for the business and ordinary and required.
And this is why we are doing this webcast, to let all the clients, everyone that's watching this this video, to plan ahead and not to wait at the last minute, having not an ability to plan, to buy, to invest on the business, and obviously having a huge bill at the end of the year.
Very good. Final note, as far as that fourth quarter payment, you may have heard that I actually said the due date for the fourth quarter is obviously going to have to be beyond the fourth quarter.
Yep.
So you have 15 days beyond the due date or the end of the period in question, December 31st, fourth quarter. So you have a chance to make purchases that would still be in effect up until December 31st. And then, of course, having that extra 14 days for you to now do the accounting, find out how much your taxable exposure is now that you've made this large purchase, in order for you to make that electronic payment nowadays. You're not mailing anything in, but electronic payment in by the 15th of January, and you would be considered timely paid. Guys, a quick way to get a quick answer is by using the comment box below. Don't just subscribe to this channel, even though we will be doing this
Pro bono.
tax workshop on a daily basis, but lend your voice to the show to make it a whole lot more fun. Guys, happy Hump Wednesday.
And remember, we're not lawyers, and this is not a paid consultation. So if you need one, please email us at mnmtaxman@gmail.com or send us a text message to 562-756-9924. That number.
562-756-9924.
Got it. Thanks, Patrick.
Great job. Have a great day, guys.